I'm Andrew Savickas, publisher at yieldtalk.com, and I'm joined today by Anthony Zhang, founder and CEO at Vinovest, a platform allowing everyone to invest in fine wines. Thank you for joining us, Anthony.
Absolutely. Thanks for having me on, Andrew.
No, I'm glad to have you here. Um, tell me a little more. Tell me a bit more about where the idea for Vinovest came from.
Yeah, so I think the idea for Vinovest really came a few years ago. I was reading through a few reports and stumbled upon one talking about the historical returns of fine wine. And I was pretty intrigued when I heard that it actually outperformed the S&P 500, not just over a few years, but over 4 decades.
Wow.
So that immediately got me, just really, really intrigued, and I started trying to invest in wine myself. So I was looking into different brokers, consultants, even going to a few auctions, and investing in private wine funds. But I realized that even though I was making some pretty good returns, it was still very tough to manage. There wasn't much information out there on which wines to invest in. I didn't have a wine cellar at the time, so managing like the physical storage and custody of all these wines that I was getting from all around the world was really tough. And then finally, from a liquidity standpoint, there's a ton of places where you can buy and sell wine today, but how do you know what you're getting is the right price or the best price, and how can you do it in a more efficient and streamlined way? And I think, given those issues, I decided to just build a better solution myself.
That's fascinating. Yeah, I remember reading an article in The Economist maybe a year ago or so about wine investment. It was just a world I'd never heard of before. And it's fascinating, just not only the performance numbers, but just that there's this whole infrastructure of exchanges and buyers and brokers and storage facilities. And I think it's really interesting that you're bringing that to more of a everyday investor. Um, speaking of, there's more than 120 online alternative investment platforms out there. I've seen things, everything from litigation finance to music royalties to real estate. Why should an investor looking at some of these alternatives look at fine wine and Vinovest in particular?
I think the cool thing and the unique thing about fine wine is it's not new. People have been investing in wine for decades, even centuries. It's
Hmm.
just only been available to like that top 0.1%. I think most people know the general concept that wine gets better with age, but they don't know how much better. And they don't know, even if they did, they wouldn't be able to manage all of these things that I mentioned, right? There really is a pretty large startup cost and barrier to entry from a cost standpoint. So with Vinovest, like we're really designed for someone who is, a savvy investor, maybe has invested in a few other alternatives, but knows nothing about wine.
Hmm.
The way that we set up the product experience is to have it be a portfolio that's tailored based on not what you like to drink, right? But actually based on your risk tolerance, based on how much money you're planning on putting in, over what time period, and translating it into easy financial terms that I think most people will be able to relate to. And our team is the one that does the heavy lifting of constructing the portfolio through our investing algorithm,
Hmm.
actually authenticating it, storing it, and maintaining it properly in our storage systems, and then also giving you ongoing buying and selling recommendations and rebalancing your portfolio when needed so that you can stay within your original risk tolerance levels.
Right, right. And what kind of returns? Obviously nothing's guaranteed, but what kind of returns can someone expect in investing in a portfolio of wine?
Yeah, so the historical returns of fine wine have been a little bit over 12% over the past 40 years. And it really depends on what sort of aggressiveness you want to go with. If you're conservative versus aggressive, you have different expected return levels, but we definitely aim to outperform that with our aggressive plan.
Okay. And what kind of hold time is this? So, what's a typical hold period for a wine investment?
So I think with wine, the main thing that drives up the price, other than the aging process, is the dwindling supply due to global consumption. So that does take a few years. We usually recommend a minimum hold of 2 to 3 years.
2 to 3 years. Yeah, that makes sense. And then you mentioned something about authentication. That was something else I read in that Economist article that there have been challenges with fake wine, basically. And I'm kind of curious to hear how have you run into that in your own travels and or how are you trying to make sure to avoid any issues with that for investors?
Yeah, I think it is a pretty huge issue. You never know if you're buying wine or you're buying vinegar. Um, at the end of the day, if you don't know your sources, and that's why with us, like, we are able to actually guarantee that the wine that you're buying is going to be authentic, and it's also going to be in good condition, so it's not corked or has been stored incorrectly, which are all big factors that can really um, you know drive down the future value of the asset.
Right, right. Yeah, that makes sense. And what? Why do you think it is that wine? I mean, you sort of mentioned it a little bit about consumption kind of removes it from the market, right? But what is it? What do you think it is about wine that um, why it holds up so well, through economic downturns and sort of through the years?
I think it's because it's really just ingrained as part of human nature, right? Like, we've been drinking wine for thousands of years, and
Yeah.
whether the stock market is up or down, this bottle of wine still needs, say, 10 or 20 years to reach its peak. So people holding on to it, at least when they're cellaring it and storing it, have a pretty long-term outlook, and they're not the type to just like panic sell. They might panic drink, but that's probably about it.
Right, right, right. Well, it's interesting. You talked about wine cellars and storage and this sort of thing, and what's I think one of the more interesting things about what Vinovest is doing is a lot of the platforms that I've looked at and that talk about on Yield Talk are dealing with securities, and there's SEC regulations and accreditation and all kinds of paperwork associated with these things. But in this case, it's interesting to realize there's no security involved, because what you're buying is the wine. Can you help me understand how that works? So you're not shipping wine to people, right?
No, so by default, we do store everything in our facilities. We're really seeing investors that come onto our platform treat it as an asset and separate than what they would usually drink on a daily basis. And I think that's another unique part about our platform, right? We're allowing you to fully own the physical asset without having to deal with the logistics. You're
Hmm.
not buying into a wine fund. You're not buying shares that represent wine. You fully hold title over it. So, in terms of the accessibility to any investor, as long as you are of drinking age in your country, you can buy wine. And I think that really opens up this pool, not just to accredited, not just to high net worths, and makes it much more available.
Yeah, I meant to ask you if there were geographic restrictions on who can invest through Vinovest, but it sounds like there's not really.
Yeah, we're open worldwide.
And what's is there a minimum investment amount?
Yeah, our minimum investment portfolio started $1,000.
Okay. And how many, how much wine do you get for $1,000 these days?
So it really depends, right? So I'd say, like, with the investment worthy wines, you might get a couple cases,
Yeah.
and these wines will range from maybe $100 a bottle, maybe $200 a bottle. And as you build up the portfolio, it opens you up to more available wines, right? We wouldn't put $1,000 bottle into someone's $1,000 portfolio just from a risk management standpoint. So as you get bigger, we also help to diversify.
No, that makes sense. And you talked about uh, diversification, how important that is, but also, and you talked about the time horizon, typically 2 to 3 years. And then what does that mean? How does someone, realize the gain on this? There's obviously no cash flow associated with the wine investment. So, how do I sell my wine when it's time to get out?
That's a great question. So the good thing, and I think another unique thing about the wine market, is that there's a lot of people buying and selling wine for consumption. So
Yeah.
when we sell your wines, it's not necessarily to another wine investor. That pool today is relatively small. But think about the companies like importers, distributors, retailers, hotel chains, restaurant groups that are all buying wine from a consumption standpoint. So
Mhm.
we have a lot of liquidity channels that we work with. We don't really care at the end of the day whether the buyer is buying it for investment or for for consumption, or a mixture of both. As long as they give the best possible market price, that's us doing right by our investors.
Right. Okay. Yeah. It didn't occur to me that. I mean, I imagined you were finding other investors to buy these wines, but it makes perfect sense that you'd have hotels and restaurants who might want this not to hold it for value, but actually to sell it or to consume it.
Mhm.
And something else that's really interesting, I remember hearing about Vinovest is, you because when you invest, you own the wine. You will actually send people the wine, or at least some of it, if they want it. Is that right?
Yeah, so that is an option. You fully own the asset. If you wanted to celebrate and drink it one day, you can. Although for your profit purposes, we don't necessarily recommend that.
Right. That gives that's a whole new meaning to the term liquidate your assets, right?
Yeah, exactly.
So thinking about wine, and this comes up with other investment classes, related to agriculture in particular, and that's the kind of looming questions about the impact of kind of climate change. And I'm curious to know if what your thoughts are on the impact on the industry, and potentially the impact on wine as an asset class of continuing shifts in climate patterns and growing conditions for the traditionally active kind of wine regions.
Yeah, it's slow, but it's definitely present. So, for example, in Burgundy, and it's a region in France that's already known for extremely low yields, very high quality of production. Over the past 10 years, their yields have steadily dropped due to hotter weather conditions, right? So the grapes are going to be ripening earlier in the year, which means that the annual yields are getting lower and lower, and it's also driving up prices. On the flip side, though, it's also introducing regions that were previously thought to be too cold to be producing really great world class wine as being alternatives. So places, say Oregon, or
Yeah.
even British Columbia, Canada, or in the southern hemisphere, some parts of Chile and Argentina are starting to emerge as really up and coming areas as well.
Okay. Okay. Thank you. So just kind of shifting gears a little bit here. It sounds like you kind of got into to Vinovest came in part from your own experience investing in wine. And it sounds like what from my reading your background, it sounds like you got into wine investing in part because you'd had some success as an entrepreneur with prior companies. And one of the things that's on people's minds right now, a lot of conversation happening right now, about making capital more accessible to people who want to start the next Vinovest, who want to start the next company. And there's lots of data showing that women and minority founders in particular are really not represented very well in traditional VC funding. So as someone who's now started, I think, 3 companies, what's your perspective on that, that challenge?
Yeah, I mean, it is really unfortunate. I think less than 1% of total VC funding goes to Black founders. I think the number for female founders is still in the single digits as well, and it absolutely is a problem. And I think it really starts from the LPs, the institutions, the pension funds. They don't really mandate that their GPs of the VC funds actually have a diversity mandate, and that means the actual GPs that are making the investing decisions, they are mostly Ivy League or Stanford educated white males, and they're going to be investing in their buddies' companies or investing in people who look like them, because that is the pattern matching that goes on. That also leaves a huge opportunity for VCs who actually do want to go through the additional effort of widening their pipeline, or going to historically Black colleges, or going outside of the country to be able to identify often undervalued companies that still have really amazing opportunities.
Yeah, absolutely. And I I understand that one of the companies that you started a few years ago was a company called Know Your VC, and I read somewhere that you started that in part because what you'd read or heard about harassment and really bad experiences that some female entrepreneurs had gone through. I'd love to hear a little more about that and sort of where that concept came from, and what made you sort of act on that.
Totally. So Know Your VC is a review platform for rating angel investors and for rating VCs. So think of it as like a Yelp or a Glassdoor
Mhm.
for the space. And you're right. I saw a news article one day a few years ago about how a really prominent Silicon Valley VC had been ousted by several female entrepreneurs who he had funded and they were just sharing horror stories about how he was coming on to them, he was making really, really inappropriate comments and harassing them, and how they had met for many years felt really, really uncomfortable with sharing it because they didn't want to get blacklisted. He was very, very influential. There's a very, I think, tangible power imbalance between a founder and a funder, because you are literally asking them for money to keep your livelihood and the livelihood of the people that you're employing alive. And it just made me sick. It was someone who I knew. It was someone who, because I am in a privileged position of being educated and male,
Mm.
to not have had that bad experience. And I was like, there needs to be some more accountability. So a couple friends and I put out a site, and I think because of the social climate at the time, it really just blew up.
Wow, wow. Well, I applaud your effort in doing that. Um, speaking of, you talked about that challenge, women and minorities in particular in finding capital, and there's been a lot written about how potentially equity crowdfunding and alternative funding sources might be able to help kind of fill that gap, even as much as we might try to get VC funds to be more inclusive in their funding. At the same time, there's this dynamic of at least I've sort of seen this, and I've heard this from a lot of people, that they sort of see that kind of capital as inferior, that it's dumb money, it's not, doesn't really count, right? That any company that would go and raise money through an equity crowdfunding site, must be something wrong with them, right? I'd be curious to know, as a founder, what's your perspective on pursuing non-traditional funding sources for starting a company, and what advice would you have for both investors, but also entrepreneurs who are looking at this ecosystem?
Yeah, that's a really, really great question. I'll admit, like in the beginning, as a young founder, you do kind of get conditioned, because like the things that make the news, things that make the headlines in Bloomberg or Forbes, are going to be company X raises from Sequoia or from Andreessen or from a really, really A-list name VC. You really don't get press coverage when you do crowdfunding, and also because it is slightly newer, I think that's also a factor of it. Like people don't really understand what the benefits can be, and especially I think as a consumer company, it's extremely beneficial. These are people who are going to be your best advocates, evangelizing your product, buying your product, investing in your company, and it is something that Vinovest will likely consider in future rounds of financing.
Okay. And one of the things that at least certain categories of crowdfunding and equity crowdfunding are bringing to the table is a broader pool of investors. So, accredited investors, which is right now defined as people who, in broad strokes, if you make $200,000 a year or more, or you have $1 million or more of net worth, you qualify as an accredited investor, and therefore you can invest in private placements and startups and in real estate funds. But some of the changes that started in 2012 with the Jobs Act meant that some of these things are now open to a wider pool of investors. And both as a founder, you sort of hit three different interesting pieces of this. One is you've been an entrepreneur, a founder looking for capital. Number two, you're running a platform that's looking for investors, and three, as an investor yourself. What do you see as the right kind of criteria for defining the parameters for someone being able to participate in some of these kind of investments?
Yeah, I mean, I think the accredited investor laws are kind of BS right now. It really, really just helps the rich get richer.
Yeah.
I mean, having $1 million in net worth does not make you a savvy investor. I can tell you that for sure. And I know a lot of people who are more, uh, you know, maybe they don't have $1 million. Most people don't, but they've done an incredible amount of research, or they have a great network and can really bring value to private companies. So I think it should more be like an aptitude test. At least know the risks, know the laws, know what you're getting yourself into, and then make it more accessible. I don't think that you need to be worth a certain amount or be making a certain amount to be an accredited investor.
Yeah, I agree completely. I mean, you hear the word accredited, it sounds like there's a test, and it's
Yeah,
there's no test.
there's
Uh,
no
and
are you
and
rich or
and
not? That's yes or no, right?
exactly, exactly. And you're right. I mean, I've certainly encountered people who who are incredibly smart, incredibly intelligent, and incredibly capable of evaluating investments, much better than I would be. And just because they don't meet some threshold, they're suddenly cut off from these things that would be of value to them, and they would bring something to the table as a quality investor. Um,
Yeah, something ironic is that like most VC analysts or associates, they don't make 200 grand a year. They're definitely not millionaires. And why, that's their profession. And in a legal sense, they still can't be an accredited investor.
Yeah, that's fascinating. So it's interesting, in terms of understanding people's sort of condition, their qualifications and comfort level. Is there anything that you do in onboarding new investors in Vinovest to kind of help understand where people are coming from and how much they should be investing, or sort of understanding their suitability for the platform?
Definitely. So for us, we know that we're not their main source of in their investment portfolio. Usually, our investors coming, they have most of their money in the stock market or maybe in some real estate, and they're looking to diversify. And depending on what else they own, they may be looking for various levels of risk versus return, and also in terms of their horizon, right? Is this something that they want to tuck away for a long time? Are they just trying it out? Maybe want some liquidity. So getting to know their liquidity window, I think, is another important criteria. And that's why we designed the product onboarding experience to be centered around those three key questions to be able to create something that can complement what they already own.
Got it. Got it. And what have you seen in terms of kind of demographics or characteristics of the kind of investors that have found Vinovest and have signed up for the platform, in terms of accredited, non-accredited, general sort of age or background, or just kind of curious if you what you're able to share about who the investors are that have come on board.
Yeah, so we don't check for the accredited versus non-accredited. So assuming that most are not, I think. And the interesting thing is that most of them know nothing about wine. Um, they maybe like to drink it, or maybe have heard of someone who's has a wine cellar, but they're looking at this purely as an asset. The good thing is that the numbers truly do speak for themselves. We have decades worth of historical pricing data that's available for anybody to independently verify. And I think the main thing attracting them to it is that we're closer to the top of a cycle than the bottom, and that they want to take some money off the table and put into something that is mainly uncorrelated.
Right, right. And is there a if someone decides they do want to have wine as part of their asset allocation, is there a general guideline or an idea of like what's the right kind of percentage that someone might think about of their kind of investment portfolio to put into something like wine?
So the Yale Endowment Fund famously has a pretty large allocation to alternatives, and I think a lot of funds are gearing this way, 20 to 30%. So I'd say, in your overall portfolio, maybe put anywhere between 3 and 5% into wine. And
Hmm.
if it's something you're more passionate about, put in some more, right? I think a lot of times with alternatives, it really depends on the individual investor's preferences. For me, like I love working with entrepreneurs and the startup community, which is why I'm putting money into angel investing. Some people may be really passionate about wine and want to just learn more about that world as well. So maybe they want to allocate a little bit more. So then their money's where their mouth is, and it kind of forces them to become more involved in that community.
Sure. No, absolutely. And speaking of that, if people do have or become more comfortable and familiar with wine, are they able to take a little more control of their investments with Vinovest and have a little more say, or is it all kind of a managed portfolio thing?
So the good thing is we do have a custom portfolio plan.
Hmm.
So that's for people who maybe they have been with us for a few months and they feel a little bit more comfortable in terms of having the knowledge to be able to make that sort of investment decision. Or maybe it is a mixture between passion and profit, and they want to get a bottle of wine in their birth year, or maybe an anniversary year, or save something for their kid's graduation.
Hmm.
So we do see some clients that are kind of tucking away a portion of their investment portfolio for personal or more sentimental reasons as well.
Oh, that's interesting. I hadn't thought about that, but what a great idea. Get a
Yeah,
bottle of wine for your anniversary or a kid's graduation date. That's fascinating.
yeah.
So, you mentioned angel investing, and I'm glad you did, and you obviously have some experience investing in wine. Uh, and something else I'd love to hear from is, speaking from the perspective of you as an investor. You mentioned the Yale endowment, and they put out a great report every year, and it does reinforce that the endowments and family offices and high net worth individuals have been doing this for years. They've been putting money into things like real estate, things like litigation finance, things like wine, and now it's great that we can all do that to at least some extent. And I'd be curious to hear a little more about kind of your experience investing. Like what a fun question I like to ask people who I know have some interest in paying attention to their investments and not just sort of put it into a fund, that sort of thing. Tell me about an investment that you made that went bad, that sort of a bad investment that you made along the way.
Oof. So I'd say in terms of my worst investment, it's got to be in a particular cryptocurrency. And
Oh,
I know a lot of people have fallen into this trap. It was, I think, late 2017. I had gotten into crypto in 2016, and it was all the way up, and I was feeling pretty euphoric, which is definitely when you should be getting out,
right.
and started investing in new exchanges, because I knew that's where the real money was being made. Like all the volume, whether it's real or not, these exchanges are collecting transaction fees.
Yeah.
So I actually invested in an exchange that ended up being a complete fraud. The Italian government like seized all the assets, and it was there's a still ongoing litigation from all the investors that you know can't find the founders. Like they're just completely off the face of the map right now. And yeah, that was a tough lesson.
Wow. Wow. Yeah. Oh my. But yeah, I mean, I think we all have those stories, where you make a bad decision, but you learn from it, and I think that's an
Yeah.
important part of growing as an investor. Well, looking at the other way, is there an example of one that what's one that you really knocked out of the park that you feel really good about?
I think it's got to be investment in wine. I
Yeah.
purchased a
Yeah.
case, and I think it was about $50 a bottle 6 years ago, and recently, I was looking at the value, and it's over $300 a bottle.
Wow.
So it was kind of an up and coming winery in Italy, and I just really loved it. I heard about it from a friend, and I was like, all right, let me just get a few cases, and it ended up being actually um, chosen as like the number one in the world.
Wow.
A bunch of high profile people were seen drinking it and posting photos of it, and like that just really helped, really prop it up into kind of the stratosphere.
Oh wow. I wonder if I hope none of those high profile people in Italy drinking the wine were the cryptocurrency platform.
Yeah, I don't know. Hopefully not. That's a big reason why I left that kind of
Yeah.
fast-paced industry to go on something a little more established like wine, where these people, the big players, have been around for centuries.
Yeah. Yeah. So something else I like to ask people, who do at least some amount of active investing. What's your favorite book that you've read about investing and why?
Ooh, about investing. I would say this is not directly about investing, but I think Zero to One is a really really great read. It's
Okay.
by Teal, and it really just I think informs my philosophy with starting anything. So whether it be starting a company, or be starting to angel invest, or be starting to explore a new asset class, it really helps you, I think, develop the right mindset in terms of thinking of things and how do you really scale things up and get serious.
And you were a Teal fellow, is that correct?
Yeah, that's correct.
And what was that experience like? As an entrepreneur.
It was, I mean, like, I don't want to be dramatic, but it was pretty life changing.
Yeah.
So it was, I was a college student starting my first business, and had gotten an initial offer from Mark Cuban and Mark Burnett of Shark Tank, and a few weeks later, I had gotten a call from Peter Thiel's program director.
Hmm.
He's like, had you heard of the Teal Fellowship? And at the time, I really didn't. And she told me that it's a program where it's a $100,000 grant, and
Wow.
the only thing that you need to do to accept it is to drop out of college. So it was a pretty big decision for me to talk with my parents. You know, like, hey, I just got here to college and might not be finishing it, and you know, there's this billionaire guy that wants to give me a bunch of money, so can I do it? And you know, at first it was a no, but I had done enough research and showed, you know, kind of the past success stories of previous Teal fellows.
Yeah.
And, you know, my parents were looking up who Peter Teal was, and obviously very high profile, successful investor himself. So it, you know, took that leap, and I think it helped me, you know, more than just the capital. It helped me really find a great community of other young entrepreneurs who were going through the same things that I was doing. You know, when you know your company is about to blow up or you're having a
Yeah.
bad day, you know, you can really relate when you're talking with other founders, and you can be brutally honest about what's happening.
Wow. And you know, you described that as life changing, and you know, something else I was interested to ask you about as I was kind of learning a bit more about your background, you know, before we talked. I understand that in 2016, you know, you had another life changing experience, and you know, had a swimming accident, and you know, that was a pretty serious injury. And it, you know, if it's okay with you, I'd like to hear. I think our listeners like to hear more about that, and sort of what that was like for you and how that might have changed your outlook, you know, personally and professionally.
Yeah. So in 2016, I dove into a pool and I broke my neck. That resulted in a spinal cord injury at C5 on my spinal cord, and pretty much paralyzed me from the neck down. So I was in the ICU on a ventilator for about 7 weeks, and spent the next 4.5 months just relearning everything. So I've slowly started to gain back some function. You know, started to be able to eat by myself, started to be able to breathe by myself, and you know, I was in the middle of running a company too, and you know, had to completely put that on pause. So it really just helped me realize that, like, you know, everything can change in an instant. You know, your company, although like is a very, very important thing, it's not everything. Your health is the most important thing, and it really also helped me realize, you know, who your true support system is. My girlfriend, like, she actually dropped out of college to completely take care of me. She was in the hospital every single day until I got out, and you know, helped me through some really, really tough and dark times. And you know, that's still something that is you know, a big thing every day. You know, I'm still in a wheelchair today, still working towards a lot of things in terms of regaining my independence, and also gives me a lot more perspective. You know, whenever you know, I'm stressed out about the company, or you know, there's things that are going on, I just realize that I could, you know, very well not be here today, and very, very lucky to be able to be in a position where, you know, mentally I wasn't really, you know, didn't have any damage there, and can still, you know, work on physical therapy and things like that while still being able to grow an exciting new business.
Yeah, that's incredible. To you know, a lot of people would struggle with that on its own, but to you know, go through that while you're also, you know, trying to keep a company afloat, and dealing with everything else going on, that's quite remarkable. Thank you for sharing that part of your story.
Absolutely.
Um, you know, something else that I'm always curious to hear from, as you know, you're a CEO. You're now a three-time founder. You know, something else I'm always interested to know. I've managed companies myself. Um, you know, what recruiting talent is always top of mind for CEOs, and it's always interesting to me to hear from CEOs. What's the hardest skill for you to hire for right now?
Oof, it is. I mean, I think I think the most important thing for an early stage CEO is finding the right co-founder. You know, I've been in situations where, you know, especially my first company, and my first co-founder didn't work out, and you know, thankfully with my second company and with this current company, you know, I'm lucky to be able to work with someone who is, you know, an incredible founder in his own right, has built and sold companies, and the best thing is, I think, from a communication standpoint, we work really well together. I think that, you know, kind of core cohesion really sets the tone for hiring and the rest of the company, because you really are the extension of the five people you spend the most time with, right? And with especially working on an early stage startup, the people you work with are pretty much going to be the people you spend the most time with. And I think that you know that kind of like good culture really breeds and is able to trickle its way down.
Hmm.
And that's I think going to be the hardest thing to hire for any time is finding the right time to have a co-founder if
Hmm.
you are a solo founder, or making that first decision of deciding to start a company with someone.
Right, right. That's a big decision. Absolutely.
Mhm.
Um, so, a couple more questions. What do you see as the kind of long-term outlook for Vinovest? Where do you want to take this company in 3, 5, 7 years?
I really believe that, consumers today, even more than anything, are going to be really voting with what they're passionate about. The great thing is that so many people are passionate and curious about wine. And I also think the alternative space is really, really booming. More people are finding asset classes that previously nobody thought was investable. And
Yeah.
if you're able to have a big enough audience, enough people think it's valuable, it technically can be an asset class. So wine is definitely just the start. Even just in the alcohol industry, there's things like whiskey, rare rum, scotch that can also be really considered investment grade. And I think just opening up access, I really truly believe that more people will be able to participate in the upside of asset classes that previously have been only available to a very, very select few. And continuing that mission is going to be what we're going to be doing.
Yeah, I mean, you're certainly preaching to the choir here. I mean, that's one of the reasons I got so interested in the space is just discovering just how many new asset classes were out there and available to people it was like every day I find a new one, even now. It's really
Totally.
remarkable what's out there. And I hadn't thought about that you've got this kind of built-in horizontals of, whiskey, obviously, and scotch and these other kind of spirits that people do collect. So that makes perfect sense. Um, so, one more thing that I love to hear from you is investors who are, maybe they are just discovering that there's alternatives out there beyond the stock market. They're looking at different kinds of alternative investments. What what should they do, or what should they know, to help themselves educate, um, as they come to you and start looking at and thinking about Vinovest as one of those possible investments?
I think the big thing if you're new is to really be able to um, get to know what you're looking for. Something like uh, real estate is going to be a lot more long term. Something like um, you know gold, for example, you can get in and out of it pretty quickly, and really understand like the historical volatility. And I think probably the most important thing is how correlated is it to the market,
Hmm.
because you can have something short term, you can have something long term, you can have something really liquid, something not liquid at all. But if it's all correlated to the market, it really defeats the point of being an alternative. So I would say that those are the biggest factors that I'd look at with any new asset classes:
Yeah.
liquidity, the correlation, and also the volatility.
Right. Right. All right. Well, thank you. Well, I mean, my last question for you is, naturally, I have to ask you, what's your favorite variety of wine?
Oof. I'm a big fan of Syrah.
Okay.
It's amazing, especially with how hot it's been in the summer. Grilling with meats and things like that. So that's definitely my go-to. Whether it be like a Santa Barbara kind of Paso Robles Syrah, or in the Northern Rhone, which is one of my favorite wine regions as well. Definitely my go-to.
All right. Well, that sounds good right about now. Well, thank you, Anthony. I really appreciate your time. It was great to talk to you. And anyone who wants to learn more, they can check out vinovest.co, right?
Yes,
All
that's
right.
it.
All right. Well, thank you very much, Anthony. Really appreciate it.